Welcome to FT.com. Today we're going to discuss the outlook for the LNG market in light of big exploration finds around the world. And to do this, I'm joined by Guy Chazan, the FT's oil correspondent. So Guy, this year we've seen an increasing number of big gas finds around the world, but the question is, can any of these finds be commercially exploited in light of the sort of big changes that we're seeing because of the shale revolution in the United States?
Well, yeah, it's a big question. I mean, basically what's happening is that in the US, there's been obviously enormous increases in production from shale gas. And now the US is moving ahead with a whole clutch of big LNG export projects. And the big revelation, the big new innovation here is that they're linking the price of that LNG to Henry Hub, which is the US gas benchmark, which is considerably lower than international gas prices in other parts of the world like Asia and Europe. And now the buyers of LNG that traditionally sign up to big long-term contracts of LNG, particularly in Japan and Korea, are looking at that Henry Hub and thinking, I want some of that. And that's creating a lot of disruption in the market because they're hesitating on signing up to the more expensive contracts.
I see. So if I was considering developing a large gas find, say off the east coast of Africa, I'd want to sign up clients from, say, Japan or South Korea on long-term contracts linked to oil. But these customers are now looking at the US and saying, hang on a minute, do I really want to pay these sort of prices? And without that sort of security of supply, then perhaps you don't go ahead with these projects.
Exactly, yeah. I mean, the thing is, to proceed with an LNG project, to go to FID or final investment decision, you generally need to sign up almost like 60% of the gas that you'll be producing under long-term supply contracts. That's generally been the pattern in the industry. And at the moment, there's just this big holdup. Like, none of these buyers want to sign these kind of contracts. And it means it's a kind of chicken and the egg. It means that the projects just can't go ahead.
So how many FIDs have we seen, for example, in the past year? Has there been a real slowing of the number of these decisions? Or?
There's been a very marked slowdown. Research compiled by Wood Mackenzie, the energy consultancy, shows that there were some FIDs this year, but all of them were in the US. They were US LNG export projects. And none of them were in places which we've been expecting to be the big new LNG producers like East Africa and to a certain extent Canada as well. So everyone's waiting with bated breath thinking, when is LNG in East Africa going to start moving forward? And there is a real concern that if these projects don't move forward, then supply is going to be constrained in the coming years.
Yeah, and that could also be the case in Australia as well. They have several big projects that are just coming online, but the companies there did want to expand them, put on extra trains, but now the question is, can they find the customers willing to take this gas at the price that can justify spending billions of dollars on this expansion as well? So again, you could be looking at a supply crunch there because this forecast supply from Australia may not come onto the market. So,
and I think you've yourself written about that situation in Australia, that in fact a lot of the projects, like for example Browse, are now reconfiguring. They're trying to figure out how to proceed with these projects when the outlook for demand is so uncertain.
So we could see cheaper technologies coming into play, such as floating LNG, if that reduced the costs of the projects.
Exactly. I mean, Shell with its Prelude project, its FLNG project in Australia, is moving ahead with that, and I think others are going to be looking at Shell's experience and wondering if they could do the same thing.
So all in all, then, these sort of big forecasts we had perhaps 2 years ago about LNG supply taking off, about this really transforming energy markets, we're seeing that slightly questioned now by the shale revolution in the US.
Exactly. The shale revolution in the US has just disrupted energy markets all around the world in many different ways, and this is one of the most concrete ways that it seems to be just creating all kinds of reverberations which are having big consequences for global energy markets, for the whole outlook for LNG out in the coming decade.
Okay, thank you very much, Guy. For more on this subject and the FT series on LNG, go to ft.com/commodities.